number one stock we'll be watching today is Lightspeed. The company, which focuses on point-of-sale software, reported revenue growth of 24% in its latest quarter. That met street expectations, but with consumer spending uncertainty, it sees economic headwinds impacting its top line. As for the stock story, here's a look back at the company's journey. Lightspeed investors have been on a roller coaster ride since the company's IPO in 2019. In its first 2 years as a public company, Lightspeed's market value grew by roughly $20 billion as investors fell in love with the payment software provider's business case. Lightspeed helps thousands of retailers and restaurant owners bring their businesses into the digital age. That transition has fueled Lightspeed's revenue growth, but being in the spotlight can attract detractors. There was a high-profile face-off with a short seller, Spruce Point, which accused Lightspeed of inflating its financial results. Lightspeed defended its accounting, calling the claims categorically false, but the stock plunged as a result. More recently, Lightspeed has had to navigate an investor shift away from high-flying growth companies, and increasingly, it has prioritized profitability. Last month, the company announced it would cut 10% of its workforce, after telling BNN Bloomberg last year it was not considering layoffs. When it comes to the Wall Street and Bay Street analysts, the majority of them recommend buying Lightspeed's stock. But with recession worries growing, some shoppers could cut back on their spending. If that happens, how many retailers and restaurant owners will be ready to make the shift to Lightspeed's software? And let's ask the company CEO that. Chauvet joining us now from Montreal. JP, always great to have you with us. Thanks for your time. Walk us through what's happening with the business right now.
Yeah, so good morning and thanks for having me. So it was an amazing quarter for us. Really, when you look at what's happening on the macro level, we are focusing the business on working with the more established SMBs because those are just more profitable to Lightspeed, and that's where our suite of solutions find the full value. So we've been doing really well. We had a really good quarter, and really for us the message has been profitable growth, which means we are very much in line with our target of being EBITDA profitable or better next year. And the entire focus of the company is on this. And so we're feeling good. We know we bring a ton of value to the markets, especially to merchants in this industry. They need platforms like ours to do more with less, to automate a lot of their mundane tasks. So there's a strong demand on the market, but we have to be cautious in our spend and ensure that we're heading towards profitability.
I'd love to dive deeper into that, JP. We alluded to the fact that certainly
yes.
in a challenging time, let's say for a retailer or a restaurant, and we saw it during the pandemic as well, sometimes technology can help your business, and sometimes that's part of your business case, but other times businesses have to deal with other things, and certainly given where the economy could be headed, there's probably a lot on the minds of these small businesses. So what's the balancing act on that, on convincing some of these small businesses to join the Lightspeed team versus the realities of they've got a lot on the go right now, especially with economic headwinds?
Yeah, I think that's actually what is very interesting today. Is if you look at the retailers and restaurateurs, they're facing inflation, they're facing employment going up, and so they need to do more with less. And I think that's why it's very interesting. We really have two big vectors. One is there is a lot of demand for platforms like ours. We are seeing, even when we look at our pipelines, we're seeing close rates that are really good. But then, a big piece of our revenue comes from GMV, which is, consumer spend. And so we're seeing a lot of demand for systems like ours, especially in the more established merchants, because they need to do more with less. But at the same time, we're getting fewer revenues from them because a lot of our revenue comes from GMV, which is the revenues of our customers. And that's been really difficult. So, but I think net, the company's growing really well when you look at the segments that matter for us, which are customers with more than 500,000 in revenue. That cohort is growing by 15% year over year in terms of customer count. And when you look at customers above $1 million in GMV, that cohort is growing by 19% year over year. So again, a lot of demand for the platforms. And we're distinguishing short term from long term. We are getting the merchants, we are getting the right merchants. And then when consumer spend comes back, that'll be even more tailwinds for Lightspeed.
And we alluded to that increased focus on profitability. Now, within the tech landscape, JP, we've seen a lot of companies with layoff news. You're no exception. I did want to reference back, though, to a conversation we had last summer where you told us we are not in cutback mode. We are not in a recession mode. Layoffs are not on the cards for now. And since then, there were layoffs announced. Can you talk to us about what changed?
Yeah, and I think we got to understand why we did the layoffs. We had multiple competing products inside of the company, and we had this strategy, which was one Lightspeed. And what we always told the markets is as we get to the end of this fiscal year, we'll be focusing on one product for retail, one for hospitality. And we always said we'd find leverage from this. So the reorg here is mainly around organizational structures and restructuring towards one product, versus us needing to reduce cost inside of the company. And so actually with that in mind, we are still hiring. We are hiring in go-to-market, we're hiring in many different departments, but with regards to doubling down on the new products. And so again, the restructuring here had one objective, was making a leaner organization with fewer heads. The majority of those cuts were in management, and that's because we're heading to one Lightspeed, which is one product instead of having multiple competing products within the same organization. So they're very much in line with the strategy. They were all planned, and now we are well equipped to double down on the new products as we get to the end of the year.